A proven, mechanical, boring strategy is the key to profits in trading. This specific edge has been tested over decades of backtested data, years of live market data through every market period imaginable, not just cherry-picked ones like you usually see. With well over 300 trades to hand on the 5-minute time frame, I've optimized this strategy to favor prop firm accounts, and it shows. Students are passing accounts in their first week of joining the VIP group and getting payouts within the second. This isn't a plug, it's just the truth. And it goes to show how this strategy is literally just plug and play. This video is gonna break down the exact strategy that's led to my success in the markets, as well as 2 example breakdowns step by step. So you can build a data-driven edge like a professional investor and not just a 1-minute scalper. Everything has a reason, so you're never left feeling stuck or clueless behind your ideas. So take notes on every point and watch till the end, because it's all just small pieces of a bigger puzzle. You miss one, and it's never quite going to add up. Step 1 in the markets is confirming our directional bias. And this is going to be imperative to trading consistently, since you can predict where the market is going to go next. We are never going to take a clearly counter-trend trade because it's not backed up by logic, and it's not what the profitable version of you would do. So at the start of every day, what we're going to do is look at the current market structure. As we can see here, we are breaking into an uptrending market, since from the start of our session, we've not made any bearish market structure. For example, we haven't made a lower low here. In fact, what we've done is match lows and then go on to make higher lows and higher highs. Breaking highs over to the left is going to be confirming market structure even more. Looking over to the left, we're also breaking these highs. So what are we going to be looking for? Well, we're going to be looking for buys. We're breaking market structure to the upside, so we can guess that the market will keep going upwards. Now, I'm sure you guys know this, and if you thought this is as deep as it goes, then you are mistaken, because we have ways to completely avoid changes in market structure too. Those times where you thought your analysis was correct, but then you just completely break into another bias. And we're going to do this through key levels. These are going to be areas over to the left of consolidation or potential swing highs, just like this up here. If we were to match one of these levels and then come back down to our zone, there's a high chance that we wouldn't take entry if it's given. These are higher time frame swings, resistances, or supply zones, and if we don't invalidate them by breaking past them, then we're just going to be rejecting from them. So we wait, because we have the patience to not have such a strong confluence against us. Now, this isn't actually a valid example of a trade that I take, but it demonstrates this point perfectly. Let's say we were fully convinced on taking this supply up here, and we managed to get an entry with our TPs at our 1 to 3 or just down here at the lows. Now, we were in a bullish market, but you could argue that we're breaking bearish because we broke a lot of higher lows. This down here is technically a lower low, but if we look over to the left, we can see we are rejecting perfectly off of a key level. This in a higher time frame context is going to be a higher low. Therefore, if we think about swings, we're not going to break below this point before we just go on to make another higher high. And if entry was given, that is exactly what happens. So before you're completely sold on market structure, always look over to the left. Now, after we have that confirmed, we need to move on to the next swing that we need to see. And you're going to catch on quickly, so just hear me out. In an uptrending market just like this one, we wait for a large push to the upside and then for a higher low to be formed. Now, this small retracement, which needs to be multiple candles, is going to create a visual swing. This is going to be our liquidity for our liquidity supply and demand setup. Now, one candle liquidity, just like this over here, isn't going to be valid because it's not a visual swing, so we can't be sure that there's a strong level of liquidity sitting below there. And what's the reason behind this liquidity? Well, other strategies like breakouts, for example, are going to be using this swing as a stop loss. They get their entry when we break the highs, for example, with their stop losses just below this swing. And that is all liquidity is, literally just a bunch of stop losses. And the market loves to take this. In fact, if we don't use this as a confluence, then fake outs are going to be so consistent. And if you've ever traded normal supply and demand, I know you can't count how many times you get stopped out by a singular pip just for the market to continue in your intended direction. You are simply just the liquidity for one of our zones. It's not personal, it's just how I make 6 figures. Now, after we make the swing low, literally all we need to see is a confirmation of market direction and a zone to trade off. Let's look at the zone because it's so simple, and don't let anybody ever overcomplicate it to you. To find our zone, we look where we initially had that push to the upside from. As we can see, there was a lot of volume from this area just here. And all we're going to do is mark the last bearish candle before that bullish move. The last red candle before that green push to the upside, or gray in this example. All of this movement is going to be institutional power. You know, banks and investors that like this price, so when they buy, the market shoots to the upside. The concept goes, when we revisit this price, we're going to get that exact same movement, since history repeats itself, and we shot off very quickly. there's no way that all of the investors got their entry. And you best believe they're still interested in this price. So when we revisit this price, they're still going to wait for their entry. And since these institutions are the market movers, they're going to move the market in our intended direction. And everything is the same for a supply example. Let's say we were in bearish market structure for here. We would mark out the last bullish candle before the bearish move. Now, this wasn't in favor of market structure, so obviously I didn't take entry, but that is how we draw our zones. I'll do an entire supply breakdown later, just so you can visually see that. Now, after we make this swing low, all we need is confirmation to the upside. Since if we want to go on to make another higher high, we'll be making bearish market structure. We're either going to be making a lower high or matching highs and then going on to go bearish. That is exactly what we saw down here, and we just broke bullish from there. What we need to see is a clear break of these highs. And a great sign of this is going to be clear candle closes above this high. If we go forward a few more candles, we can see we clearly get that. And that's everything. We have our demand zone, we have a strong level of liquidity, and confirmation of market structure. This happens every single day in the markets and is so consistent. But how are we going to capitalize when this all lines up? We need a confirmation to tell us when to get in or when it's not safe to do so. A confirmation to say when to enter, not just a rough idea of where. I've got simplified videos on this specifically over in the VIP Discord, as well as a great video on this channel actually. So I'd recommend going to check one of those out just for the clearest explanation possible. The simplest of all of these entry models is going to be the directional close. And this is all I'm going to talk about in this video, since I want this to be a simple guide on how to execute this in the market straight away. Not an hour-long video where you're just going to go off and forget it all anyway. Now, for a directional close, all we need for a demand example is going to be a close to the upside. We want to go upwards, therefore we wait for a bullish close. Now, as you can see, we've already ran off quite a lot, and this is what the other entry models is going to completely negate. Just thought I'd mention, obviously for a supply example, we want to go to the downside, therefore we wait for a bearish close. Now, it's really important to mention that this cannot close inside of our zone. If this bearish candle came even a pip deeper into our zone, I wouldn't take this. That would be a clear invalidation because it shows that we're not getting good rejections from our zone. This is what good rejections look like. Now, take profits with this strategy are going to be fucking insane. Even for a bad entry model like this one. This is going to be our statistically safest entry model, but in this example, I would have taken either of the other two, which once again, I break down over in the VIP Discord. Now, take profits are really clear for this trade. We're making bullish market structure, and if we look over to the left, there are clear imbalances to fill in these huge fair value gaps. So, I mean, a good take profit would be filling in these fair value gaps. I personally have different take profit logic, but I mean, in my logic, my entry would have been all the way down here, since I would have taken the flip entry. I'm not going to break that down in this video because that goes into deeper concepts, but the directional is a good place to start. And let's just see what the market wants to do next. Well, think about it. We have market structure, we have a demand zone, and we have liquidity. The three things that the market literally moves off of. I can explain every last confluence in this setup. I'm never going to be stuck and not have a reason behind something. And if you're coming from one-to-ones, then I think you can understand how crazy getting consistent. I mean, my average risk reward is 1 to 3.5, but it does open the opportunity for 1 to 10s. And I don't say that lightly, by the way. If you go through my recent trades over in the Discord, we can see an average risk to reward of 1 to 3.5 with over a 50% win rate. As we can see, we hit a 1 to 2 yesterday, a 1 to 4 the trade before that. I mean, minus 1% for this trade, but just before that, we got a 1 to 3. And these aren't cherry picked. This is every single trade that I take. And you can ask any of the VIPs. I'm never going to delete one of these. That is literally just how crazy our edge is. Now let's move on to another example of a trade that I literally took in the Discord earlier this month. And as you can see, it ran to a 1 to 3.5. And I'm going to go all the way back to the start of the day and go through this step by step because I need to drill this into your head. That's literally what I'm here for. So starting off the day, this is actually before my session, but we can see we are clearly bullish. We are going from the bottom left of my screen to the top right, consistently making higher highs and higher lows. This low is higher than this low, and this high is higher than this high. We can see we pushed off really strongly from this kind of area down here. So let's mark out our zone, which is going to be the entire last bearish candle before the bullish move. Once again, this happens so consistently. This is what moves the market. After we back up our liquidity with another swing, we break the highs, which confirms market structure. And I mean, we've already broke liquidity ties, so we can be confident on market structure now. And after this, we have our zone. We have confirmation of market structure, as well as a really strong level of liquidity. Let's take our entry. The market comes straight back down to our zone. And this is going to be a bonus confluence that I'm just going to chuck in for this example. We see really good movement to the downside, which fills in fair value gaps. If you know what the market likes to do, we never just shoot in one direction forever. You're never going to see just a straight line. We always leave behind small gaps that the markets love to fill. And that is exactly what's happening. And that's going to be a small confluence that when we get our entry, we're going to fill in all of these gaps. I have another confluence, but I'll leave that till after we get our entry because I'm not trying to pile shit on for you. I hope you're taking notes so you don't just forget this straight away. And then, after that, we get even more fair value gaps before wicking our zone. Once again, it's imperative that we do not close inside of our zone. These are great rejections. This is literally proof that investors like this price. And I'm keeping our entries simple, just getting in on this directional close. Stop losses below the deepest wick inside of our zone, with take profits just up here at the highs. We're in bullish market structure, so we can be confident that we're just going to go off and make another higher high anyway. And what do we see? We just shoot to the upside. Now, most strategies are going to be scared about these small kind of retracements in price, like here, for example, but we're not. We're using market structure, and as we know, this is going to be higher highs and higher lows. This is a higher low because it's higher than this low, higher high, and then we make another higher low. This is literally textbook beginner market structure. Now, let me tell you about that confluence that I didn't mention just before. If we look at this liquidity just above us, we can see a demand zone. In fact, this is actually a valid demand zone for us, but we never got our entry model. Therefore, we don't take entry because we're better than that. We didn't see enough rejections to get that bullish close. Therefore, we invalidated our zone. And what happened after that? We just kept going to the downside. Other supply and demand strategies that have shit aggressive entry models are going to be getting their entries. That is exactly what this bullish candle here is. This bullish candle just here is confirmation that people are getting their entries. And where are their stop losses going to be? Either below this candle, but more likely below this swing. Therefore, they're just adding to our liquidity, making the market want to be drawn to the downside even more. After we take that, there's nothing stopping it from just shooting to the upside and getting these insane risk to rewards. Once again, I've just explained every reason behind this shit. I'm not just taking some random mentor's word for law, I'm taking the market's word, since that's literally what professional investors do. Now let's move on to a supply example. And what we're going to do is start from step 1, which is going to be market structure. And for this example, it's a bit less obvious that we're going to be breaking bearish, but the confirmations we have to determine this is this triple tap just up here. This is just such a strong sign of resistance, and we don't make another higher high. As you can see, this high just here is lower than this high. Straight afterwards, what we go on to do is break lows over to the left twice. As you can see, we just shoot to the downside. Now, there weren't many valid key levels over to the left that we need to be cautious of, but literally any potential key levels were broken through. And if you look, we just break into clear space. We've started filling in these gaps and breaking bearish, so the market just wants to keep going. Now, the only reason we're going upwards is for market structure. We need to make another lower high, as well as to grab this liquidity. It is what moves the market. There's going to be breakout holders that are still holding. Their stop losses are still up here. Why would the market just shoot off without taking all of their money? Once again, it's not personal, but it is just the reason behind our edge. Now, our valid zone is going to be up here. Like I said, it's the last bullish candle before the bearish move, which is just the complete opposite of a demand example. So once again, we have our supply zone, we have our liquidity, and we have that break of market structure to the downside. Let me just mark this out to make it clearer. Now, after we take this liquidity, get my personal entry model, which we're on a higher time frame candle. This is that deeper confluence that I was talking about. I would either get in on the flip or the break of candle. Directional close would not be a valid entry model for this. But that's why we have 3 entry models. So we have one to use in every market scenario possible. And our take profits would just be at the opposing liquidity. We know liquidity likes to sit on lows and highs. Therefore, there is going to be a strong level of liquidity below this low, as well as filling in these gaps, as well as market structure. The confluences really just start to stack. And we're pretty much already there, but we go and grab that liquidity after making another lower high. See, people are really going to be scared about this, but we have no reason to be. We know that's just how the market moves, and we trust our strategy enough to have patience. Now, a proven strategy is only going to be a third of what it takes to be a profitable trader. The rest is going to be completely on you. Do you have the mindset to be a profitable trader yet? Likely not. But after going to backtest this model for yourself, in the session that I trade, on the instruments that I trade, you will see firsthand how insane this model can be, and you'll understand that you have to hear it out. And solidifying this mindset is going to be entirely down to accountability, and is the sole reason I made the free and VIP communities, which are just down below. I'm also constantly active in the VIP room, sending the trades I'm looking at, breaking your trades down for key insights, and just cultivating a group of traders in the place where you want to be, getting payouts and certificates weekly, because you really are only as good as the people that you surround yourself with. Please do comment on what you're working on in weeks to come, whether that's strategy related or something on psychology. Literally anything. I'm curious on what you guys are working on so I know what videos to make. Also subscribe and like so you never miss out on any source on videos I drop. I'll see you over in that Discord or in the next video. Peace.